Ghana's Business Day gets explained.
Gold drives Ghana's economy as the country's largest exporter, generating record-breaking revenues that significantly strengthen foreign reserves, stabilize the local currency, and attract more foreign direct investment. Gold accounts for roughly half of Ghana's total export value, far outpacing other commodities like cocoa and oil. In a single year, gold export receipts reached $20 billion out of a $31.1 billion total export value. The centralization and aggregation of gold through the Ghana Gold Board, also known as Gold Board, generated over $10 billion from exports, which played a major role in a massive appreciation of the Ghanaian cedi and boosted foreign reserves. Large-scale mining companies directly employ over 13,000 workers, supporting more than 200,000 induced and indirect jobs. The artisanal sector supports up to 5 million livelihoods. Small-scale miners now produce slightly more than half of the country's total gold, surpassing large-scale production for the first time in a century. Yes, so small-scale miners now produce slightly more than half of the country's total gold, surpassing local scale production for the first time in a century. Hello, good afternoon, and welcome to the Afternoon Business Review, where we tell you what moves money and markets. That's how we start the show today. My name is Agyemang Prempeh. Let's move straight to the commodities market and let's check out how crude oil, gold, and cocoa is being priced. Since I started Did You Know segment with gold, it would just be right for me to start with how much gold is being pegged on the international market. And gold is pegged at $3,981 per ounce. Crude oil is selling at $69 per barrel, and cocoa is priced at $5,178 per metric ton. And on the currency board this morning from the Bank of Ghana, the dollar is selling at 11 cedis 20 pesos and is going for 11 cedis 19 pesos. The pound is trading at 14 cedis 84 pesos, at 14 is 82 pesos. The euro is going for 12 cedis 80 pesos and is buying at 12 cedis 79 pesos. Please note, these rates could be slightly different at the various forex bureau and banks. As we say always, don't go to the black market, don't go to Accra, don't go to Circle, neither should you go to airport. Now, Caitlin Dazi of Databank is on standby with stock market update. So we'll try and bring you Caitlin Dazi in a minute. But just don't know that you're still listening to the Afternoon Business Review here on Class 91.3 FM with me, Agyemang Prempeh, sitting in for your host, Nana Oye Ankra. Caitlin Dazi is up next with stock update.
The stock market started the week on Monday with price gains in 5 equities against 4 laggards. The top gainers were Casapreco, SIC and MTN Ghana, while ETI, Ecobank Ghana and Republic Bank declined. Driven by the price gains, the Ghana Stock Exchange Composite Index declined to a year-to-date gain of 68.19%, while the Databank Stock Index declined to a year-to-date return of 84.23%. Casapreco and MTN Ghana traded the most, accounting for 89.8% of the market turnover. For Databank Research, Caitlin Dazi.
And I am Agyemang Prempeh. It's now time for us to usher into local and international stories shaping the local and international scene, however you want to put it. But there's local news and there's international news. For on the local front, UK-based rating agency Fitch Solution has projected that Ghana's economic growth will moderate to 4.7% in 2025 from 5.7% it projected for the year 2026. According to Fitch, this is as a result result of less favorable base effect and weaker agricultural output. It also stated that stagnant oil and cocoa production will constrain export growth. There's more in the following Newsdesk report.
Fitch Solutions disclosed that fiscal pressures will also intensify as principal repayments under the DDEP, launched in December 2022, begin to fall due, while Eurobond debt service obligations also increase. As a result, a larger share of government resources will be directed towards debt servicing at the expense of government consumption. It added that risks to its 2026-2027 growth outlook for Ghana are mixed but tilted to the downside. The UK-based firm emphasized that domestic demand could prove more resilient than it anticipates should consumer and business sentiment remain strong despite rising inflation and geopolitical uncertainty. Household spending and private investment will likely outperform our expectations. In this scenario, economic growth would exceed our current forecasts. Meanwhile, Fitch expects economic activity to remain robust in the second quarter of 2026 despite disruptions in global energy markets stemming from the US-Iran conflict. Ghana's economy expanded by a robust 6.4% year-on-year in the first quarter of 2026, accelerating from 5.8% in the fourth quarter of 2025.
So that was a Newsdesk report. Now, the Deputy Finance Minister, Thomas Nyako Ampem, says the Ghana Gold Board is helping stem gold smuggling losses while boosting foreign exchange earnings in the country. According to him, between January 2025 and May 2026, Gold Board purchased 135.8 metric tons of gold, mostly from artisanal and small-scale mining sector. He disclosed that about $16.1 billion was spent on gold purchases over the period, including $9.8 billion in 2025 alone, generating over $10 billion in revenue.
A report, including from Reuters, indicates that Ghana lost about $11.4 billion between 2019 and 2023 through gold smuggling. The Gold Board is gradually reversing this bleeding. Mr. Speaker, on the source of supply, Gold Board's supply comes from two principal channels. First, the artisanal and small-scale mining sector, and second, the large-scale mining company. Mr. Speaker, the Gold Board purchases and aggregates gold principally from the artisanal and small-scale mining sector through licensed buyers operating under the Gold Board licensing regime. As of 31st May 2026, Gold Board had licensed a total of 1,184 buyers. Mr. Speaker, from January 2025 to May 2026, the Gold Board purchased a total of 135.843 metric tons of gold, of which 135.221 metric tons were sourced from artisanal and small-scale mining sector. Mr. Speaker, last year, 2025, the Gold Board cumulatively purchased, aggregated and exported ASM gold totaling 104 metric tons, which generated in excess of 10 billion United States dollars for the country. This singular achievement of the Gold Board was critical in the appreciation of the Ghana cedi by about 41% against the US dollar in 2025, and in increasing foreign reserves from about $8.98 billion in December 2024 to $13.8 billion by end of December 2025, among others. Mr. Speaker, from January 2025 to May 2026, the Gold Board expended approximately $16.1 billion on the purchase of gold, of which $9.8 billion was used between January and December 2025.
He added that the government is implementing deliberate policies to ensure that gold purchases translate into tangible national benefits.
Mr. Speaker, the bigger policy point is that government is deliberately shifting Ghana from a regime where gold wealth was dispersed, underpriced, and smuggled through the Gold Board. We have a regime where gold is transparently aggregated, assayed, refined, exported, and turned into foreign exchange and reserves for the Republic with visible and tangible benefits for the entire country. Mr. Speaker, to enhance regulatory compliance and sustainability, the Ghana Gold Board strengthened its collaboration with the National Anti-Illegal Mining Operations Secretariat to address illegal mining. Mr. Speaker, I want to emphasize that the Gold Board is not just about buying gold. It is about capturing Ghana's gold for Ghana's balance sheet, Ghana's reserves, and Ghana's economic sovereignty.
So that was the Deputy Minister of Finance, Thomas Agyemang, speaking in Parliament yesterday. On the international front, the International Monetary Fund, IMF, has approved the immediate disbursement of about $832.80 million to Cote d'Ivoire after completing the final reviews of the country's economic and climate reform programs, marking a major endorsement of Abidjan's fiscal consolidation and debt management efforts. The IMF Executive Board completed the sixth reviews of Cote d'Ivoire's arrangement under the Extended Fund Facility and Extended Credit Facility, as well as the fifth review under the Resilience and Sustainable Facility. The decision makes available SDR that is $247.774 million under the Extended Fund Facility and SDR of $123.884 million under the Extended Credit Facility and SDR 200 of $243.90 million under the Resilience and Sustainability Facility. So the fund said the program's implementation remains strong with an all-end December 2025 quantitative performance criteria and structural benchmarks under both the EFF, that is the Extended Fund Facility, and the Extended Credit Facility arrangements. So that's it for stories shaping the local and international scenes. So time check is 50 minutes past the hour 12 and you're still listening to the Afternoon Business Review here on Class 91.3 FM with me and Agyemang Prempeh. It's now time for us to move into a big conversation for today. So today we are talking about the proposed utility tariff increment, which is expected to take effect on the 1st of July 2026. That is next week, Wednesday. So consumers to pay more for electricity and water effective 1st July 2026. And the Public Utilities Regulatory Commission (PRC) has also defended its decision to adjust electricity and water tariffs. It stated that the increases are necessary to sustain utility service delivery across the country and that the latest quarterly review electricity tariffs have been increased by 3.49%, while water tariffs have gone up by 0.85%. Meanwhile, the minority in Parliament has strongly opposed the proposed tariff adjustment by the PRC, which include a 3.49% increase in electricity tariffs and 0.85% increase in water tariffs. The caucus argues that prevailing conditions in the utility sector show improvements that should have led to a reduction in tariffs rather than an upward review. So according to the minority, consumers are being shortchanged, insisting that a reduction of not less than 6% would have been more appropriate given the current sector performance and economic conditions. The debate adds to ongoing discussions about the cost of living pressures and utility pricing in Ghana. Here's the Deputy Ranking on Parliament's Energy Committee, Collins Adumakomensa.
Now, if you look at the Ghana cedi dollar exchange rate, they themselves, they are telling us that they are using an exchange rate of 11.2228 to a dollar. The last time they did a reduction, they used 11.193. If you look at the change, it's 0.2%. If you go to inflation, indeed, they are using 3.43%, far lower than the 4.17% that they used in the first and second quarters. Indeed, they themselves tell us that the difference is about 17.74%. Price of natural gas has dropped from 8.0988 USD to 7.97. The generation mix has not changed. So how does just a change of exchange rate of 0.2% push you to increase electricity by close to 4%? It just does not add up. And I'm surprised that PRC is doing this to us. I'm totally surprised. Cumulatively, they've increased electricity by 31.69% from January 2025 to date. It was just this first and second quarters of this year that they reduced it by 4%. Even that, we challenge that. So I'm surprised that PRC is doing this to the Ghanaian people. For me, based on even their own communication to us and the figures that are previewed to, we were not expecting anything less than a 6% reduction in this third quarter. I am shocked that PRC has gone up to increase electricity again at this particular point in time. The indicators from 2025, if you look at the actual as against the projected, at any point in time, the consumers were being shortchanged. So even if you are going to, the best way for them to have approached this was to at least all the time that they've overcharged the consumers, at least at this particular point in time, they should give us some respite and not to continuously increase this figure. I'm telling you, this particular increment, based on the figures that we've seen, do not make mathematical sense to me at all.
Well, so you can join in the conversation via WhatsApp console, that is 0500,000 202. The minority in Parliament again is calling for full publication of full calculations behind all electricity tariff adjustments since January 2025. So they allege that since the assumption of office by President John Dramani Mahama, it has been a betrayal of public expectation. They maintain that the government has failed to provide sufficient justification for the latest increase, particularly following Ghana's exit from the IMF. Whereas Dumako Mensah, who again is the deputy ranking member on Parliament's Energy Committee, is calling on the PRC to publish the full mathematical calculations and data underpinning all tariff adjustment implemented since January 2025. He also expressed surprise at the latest increment, citing the relative strength of the cedi, declining inflation, lower interest rates, among others. Let's take a listen to him.
The Minority Caucus calls on the NDC government and the PRC to take the following urgent steps. Publish in clear and acceptable language the full mathematical basis for every tariff increase since January 2025. Ensure that any future tariff adjustment is accompanied by verifiable improvement in service quality, particularly in addressing the prepaid meter depletion scandal, the persistent power outages, and ECG's billing irregularities. Revisit the 2026 to 2030 multi-year tariff order, which imposed a 9.86% electricity increase at the start of 2026, in light of emerging macroeconomic improvement that the PRC itself has acknowledged. Government has repeatedly pointed to the appreciation of the cedi, declining inflation, and lower interest rates as evidence that the economy has turned the corner. If those gains are genuine, Ghanaians should be experiencing them in their daily lives. The electricity sector depends heavily on thermal generation, whose principal input, imported crude oil and imported natural gas, are priced in foreign currency. A cedi that has appreciated by nearly 40% should significantly reduce the domestic cost of these inputs. Falling inflation and easing interest rates should further reduce cost pressures across the economy.
So you heard the deputy ranking member on Parliament's Energy Committee, Collins Adumako Mensah. Now, the business community has also waded into the conversation, with the latest being the Ghana Union of Traders Associations, GUTA, calling on PRC to halt the implementation of its proposed tariff increase is scheduled to take effect Wednesday, 1st July 2026. GUTA, in a statement issued yesterday actually, June 24, described the justification for the increment as they described it as untimely and untenable, also arguing that similar explanations have been consistently used over the years to support tariff hikes. We understand that GUTA is currently in a meeting due to this conversation and the statement they've released. So keep listening to Class 91.3 FM. We'll bring you excerpt or fallout of Guta's statement, meeting, a closed door meeting they're having today. But let me bring you up to speed on the statement released by Guta. So it says Guta wishes to call on the public and the Public Utility Regulatory Commission (PURC) to halt the implementation of their intended tariff increment effective 1st July 2026. The association is of the view that the reasons given by PRC to justify the increment are not tenable and has been the same reasons given over the years whenever they want to increase tariffs. PRC attributed the increment to the following: exchange rate fluctuations, high inflation, fuel costs, and generation mix. But Guta says it thinks that the above reasons do not represent the true facts that warrant PRC's justification. It says, 1. It is true that the cedi depreciated by an average of 4.18% between April and May, but this depreciation is insignificant, which does not call for an increment. 2. Inflation just rose from 3.4% to 3.7% in May, which is also minimal. 3. Regarding fuel prices, it rather fell in the second pricing window of June. Petrol fell by 9.3% and diesel by 1.7%. 4. On the issue of generation mix, there is no problem as all the machines are working. Based on the aforementioned, PRC has no justification for this tariff increment, as its implementation will further lead to a high cost of production for manufacturers, which will then translate into high prices of goods and services. What PRC must be concerned with has to do with the inefficiencies and waste in the utility companies so that they can perform better and improve on their revenue assurance and not always resorting to tariff increments. Guta therefore calls on PRC to halt the implementation. So it was signed by the Guta president Clement Boateng. And now FABAC, that is the Food and Beverages Association of Ghana, they've also waded into the conversation from Monday. Now FABAC is saying that the increment will worsen the cost of doing business and serve as a disincentive to both traders and consumers. The General Secretary for FABAC, Samuel Agri, has been speaking to Class News. Listen.
But if you look at the tendencies that we see today, the cedi has depreciated by only 0.2%, yes, at the time of doing those consultation and considering the price tag. 2, if you look at the cost of crude oil in the international market today, we are less than $70, and it's going to come down to about $52 by the time we reach July 1st. So if you look at the prices that are coming down, there's no need for them to go up, because when it got to over $90, the price was still stable. So we don't see why they have to come and tell us that we need to increase because of these two things that I've mentioned, the inflation and then the depreciation and then the inflation. Inflations are below 5%. So what is their basis? So it's like anytime the slight changes, they need to go up and then make the money that they want. But they are not asking those questions, whether the ECG is providing an efficient service.
So you heard the General Secretary of the Food and Beverages Association of Ghana, FABAC, Samuel Agri, there. So that's how we wrap up today's edition of the Afternoon Business Review here on Class 91.3 FM. And my name is Agyemang Prempeh. As always, we say you don't need a dictionary to understand business news. Just log on to classfmonline.com, the business segment, and you find anything and everything you need related to a business. Catch us Monday, same time, 12:30 to 1 with your host, your regular host, Nana Oye Ankra. Good afternoon.